Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, green 175 megawatts power for Sibanye-Stillwater Platinum Group Metals mines. Menar spells out diversification strategy, and long-term supply contracts shielding Sibanye-Stillwater from PGMs price swing. A total of 175 megawatts of clean green renewable power is on the way for Sibanye-Stillwater's Platinum Group Metals mines in South Africa.
Due to the emissions profile, one of the strongest levers that we can pull is the deployment of renewable energy. And I'll talk to our solar PV project shortly, but I previously mentioned our wind energy projects, which will enable rapid decarbonization of these particular operations. In terms of the remnant diesel that's used at our mechanized operations, we're exploring the use of battery electric vehicles, as well as setting Scope 3 targets for those emissions that are occurred through the third-party processing of our concentrate. Electricity will continue to remain the focus at this operation, so given its predominance in terms of emissions.
The diversification strategy of private investment and management company Menar is very much in sync with the global push towards a greener future.
We have the following pillars regarding our diversification strategy. Our first pillar is to continue operating our existing predominantly coal mines and coal and anthracite mines and bringing existing rights into operations. And that leads us to the second pillar, which is generating / raising capital for diversification. And it's by managing, obviously, our current operations prudently and bringing into operation our existing rights, we will generate capital, which will then enable us to take the advantage of opportunities that are in line with our goal to be a miner with a diverse portfolio. The third pillar is to successfully operate our East Manganese mine, which is our latest development, which is also a part of our intention to reach our diversification goals. And the fourth is being on the lookout for acquisition targets, either in operation or in need of development, in manganese, iron ore, and chrome in South Africa. For those that are in operation, we are looking at those in need of capital injection and technical ingenuity and managerial turnaround to scale up production and improve efficiencies.
Sibanye-Stillwater has emphasized its strong long-term supply contract positions in the face of the current spot price pendulum, swinging away from the sky-high price levels of earlier.
It's always important to remember where you've come from. In 2014, we announced our intention to enter the PGM business based on the fact that our core competency at that time, being medium and deep level underground mining and of course rock breaking, was very similar in the PGM business. Of course, you cannot move into another commodity unless you fully understand the fundamentals related to the supply and demand of that particular commodity. So we conducted a very thorough and detailed analysis of the PGM market and, of course, fundamentals that underpin the PGMs, which led us to developing a leading PGM business at a low point in the cycle. And that was not the only thing. I think we, being new entrants to the market, looked at things very differently, and we very specifically for a period have built up a large exposure to palladium and rhodium. That was not by mistake. That was based on some of the fundamentals that we understood at that time. And the net result is that we have built a leading global, and I want to emphasize the word global, PGM mining and recycling position. And we established that between 2016 and 2019, and of course that was very swift and decisive action. And we always represent our strategic thinking in sigmoid curves, and you can see how we built off our gold base, which we discussed at the last Investor Day, and you can see how we first acquired Aquarius, Rustenburg, And in fact, Lonmin was meant to be the third acquisition, and it moved out to the fourth because we recognized the changing palladium market dynamics, and we also wanted to become global. That's a critical point. We're not just based in Southern Africa. We're not just based in Russia. We're a global PGM company, and we acquired Stillwater as our third step, which also gave us a very significant exposure to recycling.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.